It's time for a 2-week Southern California market update. If you're ready for your Southern California real estate market update for single family and multifamily, it's time for our mid-January update. I had Gigi join me. It's been a while since she's been on the channel. Thanks for joining, Gigi. I appreciate it. It's hard to understand you with those braces on, but we get the point. All right, go do your homework.
Like the video.
We're 2 weeks into January, and it's time to look at the data because this is going to define how 2022 starts out for buyers and sellers. Make sure you stick around to the end where we go through the foreclosure numbers. We're going to go through December 2021 numbers, and now we have annual data. So we're going to compare the entire year 2021 to years past for notice of default and notice of trustee sale. These are numbers you have to see. Hey there, Christian Walsh, real estate agent with Wire Associates. We've been helping buyers and sellers and tenants and landlords make the best decisions during these crazy days in California and beyond. It is going to be a crazy season starting out in 2022, and we're going to show you exactly what we mean, whether it's crazy for buyers or sellers or both. So if you're ready to dive into the foreclosure numbers, single family numbers, and multifamily numbers for Orange County, LA, Riverside, San Bernardino, San Diego, Ventura, hit that like button and let's get started. And here we go, diving into the latest data for Southern California. So the first 2 weeks of January. And why is it important to be looking at this? We need to know what's going to happen in the year coming ahead. And this is going to give us a good idea of how the year is going to start off. So starting off with Orange County, you will notice a trend in most of the counties we're going to cover, and we'll point it out when we don't have that trend. It's coming up in our trusty Ventura, which is always doing its own thing. But in the other counties, we see this trend. And what you're going to do is you're going to look at the new listings line, the red line, and you're going to look at 2019. And what you're going to see in 2019 invariably for single family is that there was a bump up in the number of listings. And why is this? Well, you know the answer if you've been watching my videos, because in November of 2018, interest rates hit almost 5%. They then backed off through December and January. They backed off that 5% level. But what it did is it spurred sellers to list their homes. They decided to list. And we see that bump went into January. So starting off in January 2019, lots of inventory. And you can see that buyer demand was down a little bit. You see that dip. But that all bets are off now. We're looking here at 2022 and we have a completely different market. So you can see that for new listings in Orange County, it's fallen off a cliff. This is absolutely record low. We are down a significant number of listings, and I can attest this. I have buyers out there looking, and there was nothing for us to see in most of December and in the beginning of January. So here we are now, record low inventory. We still have solid demand. There's still a record number of properties going under contract. The only thing that's reducing the number of properties going under contract is the lack of inventory. And you're going to see in 2021 in most of these counties, we had more properties under contract at this time, but we also had more inventory. What I would venture to say is if we had similar levels of inventory, we may actually have more properties going under contract, but the inventory is squeezing out buyers. They can't get in there and buy homes. So this is Orange County, dramatic cliff for new listings in January. And what this means going forward, unless we get a dramatic increase in the coming months, it is going to be an even tighter seller's market in Orange County than it was last year, and last year was absolutely nuts. Make sure you check out that prediction video so you can see how this is going to play out for buyers and sellers. And here we are in Los Angeles. LA has been historically pretty solid with the number of listings, but that fell off a cliff. If you look at this, for LA, this is a dramatic drop, and we still have an increase in the number of properties going under contract. Now, again, you'll see 2021, there were more going under contract, but still the next record is 2022. So it is off to an amazing start, but it feels tighter than last year did because of the lack of inventory. Riverside, we can see that has trended down. You see that bump I was talking about in 2019. And since then, it's dropped. And we're at record lows for listings, but we still have super solid demand. So very much a seller's market in Riverside. It is going to be very difficult for buyers, tougher than the beginning of last spring, if you can wrap your head around that one. San Bernardino, again, the drop in listings. Now, they didn't get as much of a bump in 2019. That's okay. But since then, the listings have dropped dramatically. We can see, too, that actually we're at a record number of properties under contract in San Bernardino, and we have record low inventory. So crazy seller's market. Ventura, my buddy Ventura, you're at your own pace. Now, you do have record low listings, but then you had a record low number of properties going under contract. So the beginning of the buying season in Ventura actually is not going to feel as tight as 2021 because we have a bigger gap between the number of listings and the properties under contract. It's still a seller's market, but not as crazy as the rest of Southern California. And we've talked about it before. Ventura just kind of does its own thing. I keep thinking it's like the canary in the coal mine for things to come, but nothing changes in SoCal. It continues to move along and heat up. And even Ventura towards the end of the year recovered and looked like the rest of SoCal. San Diego, we've got low listings, we've got strong demand. So actually looks a lot like LA between the demand and number of new listings, but still a solid seller's market in San Diego for single family. And one of the few places you can get the multifamily sales numbers is right here on this channel. And make sure you subscribe to our newsletter so you can get these charts and look closer and play with the numbers to see the exact data. We have a link below so you can subscribe to our free weekly email newsletter. Now, multifamily is not quite as consistent as single family. In fact, things are kind of all over the place in multifamily in SoCal. It doesn't mean that there's any sort of crash coming at all. It's just things are all over the place. So let's dive in and look at the different counties. So Orange County, dramatic drop in the number of listings, and we have solid demand, almost as solid as last year's demand. And this is showing that basically it's a crazy seller's market. We have a few multifamily listings coming, so make sure you subscribe to our newsletter so you can see those, so you get a shot at buying some of those. Costa Mesa and Huntington Beach, we have some listings coming. LA multifamily down on the number of new listings, a record low. Solid demand. It's not hasn't gone through the roof, but this is looking like more of a seller's market, a tighter market in LA. In fact, the tightest we've seen in the start of the new year going back. Still under eviction moratorium in LA County and LA City. The LA County moratorium may end at the end of this month. We'll see what happens, but that's also should be affecting sales numbers because a landlord can't evict a tenant for non-payment of rent. So you could theoretically have some properties where tenants aren't paying and the landlord needs to sell or wants to sell, and that's going to reflect the landlord may decide to wait, and that could reflect why numbers are down for listings. Maybe they're waiting for a moratorium to end. But as far as buyers go, buyers are still writing offers. Investors are still buying multifamily in LA. Riverside, so here, this doesn't really follow the trend of the rest of SoCal for multifamily. We have an increase in the number of listings. Maybe they're watching my videos and seeing that it's a good time to sell in Riverside. So that's why they're listing. But you can see solid demand. But the start of the year, it's a big gap between the number of properties going under contract and the number of new listings. So still a seller's market for well priced, but not a dramatic tight market like Orange County, for example. San Bernardino, low inventory, record low, and very consistent and solid demand. So this one is a county where we have an extreme seller's market. They're going to need more inventory in San Bernardino for the investors that are looking to buy there. It tends to be a more affordable market for investors, slightly higher returns on investment known as the cap rate. And Ventura, just not much in the way that we can see because there aren't enough transactions. You can see though that There's pretty solid demand going into 2022 and only one new listing in the first 2 weeks. So we'll keep tracking this. This is a case in Ventura. There's not a ton of sales for multifamily, but if you happen to have a property you're listing to sell, you price it right and you will get multiple offers. There is demand in Ventura. San Diego, we see an increase in inventory, actually a record high, but it's nominal. It's not that much higher on inventory, and solid number of properties going under contract. So you can see that it's a solid market, but not an extreme seller's market. So you're going to have to price right in San Diego in order to get that building to trade. Time to dive into the foreclosure numbers, and we're going to cover a lot of ground, and we're going to do it very quickly. So that's another reason to subscribe to the newsletter so you get these charts. But I want to run through these numbers. If you fall asleep, wake back up and come back and check out this section again. It's important to dive into these numbers. This will give us an idea of what we can expect in 2022 for foreclosures. Are they going to actually come into inventory and help increase the number of homes that are for sale? Let's dive in. Well, the first step in the foreclosure process in the state of California is notice of default. After missing a payment, it can be issued 120 days later. So it's important to look at these. These are going to tell us about the future and the rest of the foreclosure process. So here we are, we're looking at December's, and we're going back to 2015. And the very first thing you'll notice, well, let's talk about this weird anomaly. In Los Angeles, we had an increase, and you can see some of the other counties had increases as well. In 2019, Los Angeles went through the charts. We double checked the numbers, and it is what it is. We had this dramatic notice of default filings in 2019. They then dropped in 2020 because by this time in 2020, we were in the pandemic. Now we're after the mortgage forbearance programs. Now lenders can start foreclosing. So we should expect an increase in notices of default. The first step, and we do have an increase. We're up to 189 in LA. And then we can get these out of the way. You can see some of the others. So we do have an increase, but if you look at it, we're still not at 2015, 16, 17 levels. So those are more traditional levels of foreclosure, and we're still not there. We're not close to those levels. So the short answer is it doesn't look like we can expect a big flood of inventory because we're still not at regular foreclosure levels. This includes 2011 data to put it into perspective. Other than 2019 in Los Angeles and in Riverside, for example, we can see that if you look at 2011, we're still well below those numbers for the notices of default filed in December's. Still low numbers. We're still not at the previous global financial crisis levels of foreclosure where we saw the dramatic drops in prices. And we're not even close to normal levels of foreclosures. These are the yearly numbers for 2021. Remember, we have to wait until at least the middle of January in order to pull up the numbers for December because it takes a couple of weeks to show up on record. And we've done that. So now we have an entire year's worth of data. So you can see that the level of notices of default was very low until July, and then things spiked into August. Why is that? Well, that's because the foreclosure moratorium ended in July of 2021. But we didn't get a massive spike. We can see, in fact, in December that lenders actually dropped levels. We had more in June before the end of the foreclosure moratorium. We have more notices of default filed back then. But you can see that we rallied after the foreclosure moratorium ended. And then come September, October, we started having people being kicked out of forbearance. But we don't see a massive level of foreclosures related to forbearance ending, nor do we see a massive number of foreclosures related to the end of the foreclosure moratorium. Part of the reason is people have equity right now, so they don't necessarily have to be foreclosed on. They can still be foreclosed on if they have equity, but a lot of folks are either selling or figuring out a way to hold on to their home and continue to make payments again as the economy improves. Now, the notice of trustee sale, this is the yearly data for 2021. This is the next step. So after the notice of default is filed, 90 days go by, and then you can have the notice of sale. And then 21 days later, the sale can take place. Usually takes longer, but you can see foreclosure moratorium ended in July. They filed a bunch of notices of trustee sale in August and September, and then they stopped. These notices of sale would have been kind of low-hanging fruit. These would have been people who missed payments before the pandemic, for example, or these are vacant properties where people haven't been making payments. So they maybe got the notice of default before, and then the lenders moved into notice of trustee sale. It has gone up. We actually see an increase into December. These are still very low numbers, not enough to move the needle for inventory to the point where we can even come close to normal levels of inventory due to foreclosures, let alone a flood of foreclosures. One more quick chart. I hope you're still awake. And this is the notice of default for the entire year. When we add them all up, you can see that 2021, the notices of default were at record low levels. That's because the majority of the year we had a foreclosure moratorium. We had a foreclosure moratorium start in 2020, and you can see that we're actually below those levels in 2021. And historically, we have a lot of ground to catch up. And then these are the notices of default with 2011 in for perspective. It's important to remember where we were during the global financial crisis. We're at a fifth of the notices of default filed as compared to 2011. Definitely low levels, and no reason to believe that these are going to spike at any point in time. But if they do, you know, on this channel, you'll be one of the first to know because we're reporting this data monthly. Where do you think 2022 is going to go for buyers and sellers in Southern California? Let us know in the comments below. Make sure you subscribe to our free weekly email newsletter so you get all these charts and can look closer at the data. We have a link below so you can subscribe. Make sure you check out this playlist so that you're kept up to date on what's going on in Southern California real estate. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we appreciate you.